Today, I'm going to show you my favorite profile trade. The reason I love this trade is it's about context. Context is king in trading. Understanding setups is useful. Context really matters. If you're not sure what I'm talking about with context, I'll explain a little bit today. We'll do loads more on this on the 3rd of July in the webinar. So come along to that and I'll be talking about context and how I interpret context in relation to what has been going on recently. And we'll actually look at this on that day of trades that have been taken, and we'll see some traders P&Ls there. So coming on to that, I'll be talking context there. But let's go and have a little look at this one. The reason that I love this trade is that it trumps the simple idea. Now, if we go and have a quick look at this chart that I've got behind me, what we can see here, particularly on the daily, so that smaller chart on the left, one very bullish looking candle. You could look at that candle and say that is really bullish. Massive volume, a engulfing range, a close at the high, all of the hallmarks of a very strong bullish candle. You're looking at that thinking this is a buy. I'm looking at that though thinking at best this is a consolidation at the top of the previous day's range, and really the trade I'm looking for is this is a sell and we're going much of the way back down that range. That's what I mean by context. That's what a profile gives you. Right? Let me explain why. The reason that you're looking for a sell here is value. Value, if you look on the profile, is the purple shaded area. Now, the purple shaded area shows you where everyone's happy. When the market moves away from that, whilst price has moved, showing strong directional movement, it has not showed a shift in value. This suggests to you, people really think that value is much lower down. So, if you're a seller, you're now getting great prices. These are wonderful prices to be selling at. So you're going to want to try and sell, and you're thinking anything that's still above value is a good sell. So this then produces an opportunity to play the market back down towards the previous day's value. This is actually a trade I'd be looking for straight off at the open. So that's going to be the way that I'm thinking about this. Cash open, this is a cash or regular trading hours session, chart and profile. At the open, bang, I'm selling this. I'm looking for that move back down towards the top of value. Top of value in this trade is actually all the way down at 52.62. So you're looking for around about a 50 big tick move on the S&P. So let's then go and look at the practicalities of trading it. It's all well and good to say, well, theoretically it should go down. How are you going to go about taking this trade on? Now, we go and take a quick look at the 5-minute chart. This is now showing you what actually happened on the day. And I've got 3 different entry points here. Key for this is what do you expect to happen at each, and what's the value and risk in each of these trades. This is something you've got to weigh up all the time. This is what context and a framework does for you. So real quick, entry 1, this is the straight off the open trade. You're expecting on this trade, straight line move down, straight the way back towards value. Now, the risk in this trade is that it doesn't do it straight away. Of course, that sounds reasonably simple. But the reason for that is that on this day, we had PMIs and ISM, so 2 data points within half an hour of the open. You don't want to hold into the data. So entry 1 needs to go straight for it. When it doesn't even get inside the previous day's range, you have to give this up knowing that data is coming out. Entry 2 then is on the data. So the ISM data flicks the S&P back towards the highs. Now, if you're thinking about this in terms of context and the idea that we can still reverse this, you're looking at this thinking this is a great place to sell. I can get short, small stop just above the previous high or above the high of the day, and I'm looking now for that reversal back down. So that is entry 2. This is a wonderful situation because now we've got rid of the data. The context is now purely technical. So data's out of the way. If you haven't taken that trade though, you've got one last chance. The one last chance is after we consolidate, and you can see that little range towards the top before entry 3. Consolidation. If this is to be a balancing type day, we're going to get stuck there. If it is to go down, you want to break this. So your 3rd potential entry is on the break of that range. This is something that develops as the day goes by. This isn't the way to play it every time, but the profile setup has already told you what's potentially on. That's what you're interested in. So you're looking to play that break of 98. Once you're in, now all it is about is focusing on targets. There's 2 targets here. One is the previous day's single prints. previous highs, lows that you can see, the top of that little blue box, that's 76. So you got a little range, 77 to 74. So it's a 76 in the middle of that. That's the first target. Next target is the top of value. So the top of the purple shaded profile, the second profile in, that's your main target. Once you reach that, the job is done. The caught in the hole trade, as I call it, is complete. That is my favorite profile strategy. Coming on to the webinar, I'll be looking at profiles, and I'll actually send everybody a profile with my views on the upcoming day ahead of that webinar. So this will not be looking back. This will be what I think is going to happen. So I'll be sending that. Come join the webinar and I'll be going through that on the 3rd of July. Remember, context is king. I'll see you then.